Everybody, this is Patrick MontesDeOca with the Equity Management Academy live trading room, streaming live in YouTube. We have a nice up market in the metals here, up $10 in gold, 1788.30 last, up 10.10. Silver lagging a little bit here, trading last at 23.72 for the December contract, down about 10 cents. We're going to take a look at basically the latest report that we published on the Associated Press. We're going to take a look at some digital currencies and some new developments that have basically taken place with regards to virtual currencies. So we'll be right back here after a couple of minutes. Thank you. Welcome back here. The first thing I want to do is just take a look at where we are with relation to the gold market variable change in price momentum indicator for today. Let me just take a look at the chart here for Thinkorswim. And see if I can expand this a little bit here. The numbers on the left of the chart basically indicate the daily numbers that we're trading for today. And we can see that the market has activated a bullish price momentum by trading above the average price of 1777. And it has activated the target of 1791 to 1801 for the day. Right above that 1801, we're looking at the weekly targets that have been activated as well by the market coming back up above 1747 and has activated the 1816 to 1850 level, which turns out to be 38% Fibonacci retracement from the high that we made recently in August of last year to the recent low that we made here of 1677. The silver market trading last at 23.71. It's lagging bull market a little bit here. But it is in a bullish price momentum, daily and weekly. As you can see, trading above the average price. And the target 24 to 24.27 has been activated on the daily. And the weekly targets are 24.65 to 25.56. Unless we close below 23.47, it looks like the market is in a bullish price momentum. One of the things I want to do here is to share with you the latest report that we published in the Associated Press through Seeking Alpha, which is entitled SDRs May Be Subtly Becoming the New World Digital Currency. We've been looking at this situation developing here with the IMF basically allocating about $650 billion to meet what they said was a long-term global need to reserve assets. And it is unclear why this was needed since governments were already printing huge amounts of money. The Fed says the increase in SDR is not expected to increase any global inflationary pressure. Quantitative easing was also not supposed to lead to any inflationary pressure, yet prices continue to rise and have since 2008. During the 2021 pandemic, the IMF is allocating 650 billion US dollars to meet what they said was a long-term capital global need for reserve assets. It is unclear why this was needed since governments were already printing huge amounts of money. The G7 government's debt is 140% of GDP. And a major central bank balance sheets as a percentage of GDP is at 78%, the highest levels ever. We appear to be in a crisis. The Fed is issuing even more special drawing rights, SDRs, which further increases the money supply. The Fed says that the increased SDR is not expected to increase any global inflationary pressure. Quantitative easing was also not supposed to lead to any inflationary pressure, yet prices continue to rise and have since 2008. We feel the potential for inflation is now highly likely, and even hyperinflation is a possibility. SDRs may be becoming a new world currency under the control of central banks. In 2007, the major central bank balance sheet was $4.9 trillion. And today they have topped 30 trillion. As it has helped the economy, has this helped the economy at all? No. U.S. federal debt has topped 28 trillion. All U.S. sector debt is more than 84 trillion, and apparently it's not enough. The Fed and other central banks want even more debt, more reserve assets, and more printing of money. Every country that has tried to reduce their balance sheet or reduce the printing of money has had a backtrack, as the stock market and Wall Street have had a tantrum. Wall Street appears to be more in control of the financial world than the Fed or governments. The global economy is based on massive debt, and governments and central banks continue to prop up by printing yet more money. Investors are turning to real money, according to gold and silver. Demand for gold and silver is increasing. Demand is increasing again this year as investors worry about the Fed's policies and the declining value of fiat currencies, like the US dollar. With talk of new global currency, digital currencies and fiat currencies are at war. We are beginning to see a reset of the monetary system. Gold and silver are also at war against fiat currencies over what is real money. The recent major attack on precious metals since Sunday night involved $4 billion in short contracts in the paper market. This was about a week ago. The precious metals markets, the paper shorts were for gold that did not exist. The US dollar benefits as gold suffers. Gold made a law of 1678, matching the previous March low. Then buyers came into the market. This was identified by the variable changing price momentum indicator algorithm weekly buy 2 level, which recommended buying into the market. From there, the market reverted back up above the VCPMI daily average of 1745. Now we have a bullish price momentum with the daily VCPMI targets of 1764. Sell 1 to 1794. Sell 2 and the weekly average price target of 1786. It appears we have a bottom forming with the daily, weekly, and monthly signals indicating a bottom has taken place. 1810 to 1813 are more targets. And if we get above 1810, then we are looking at the annual average price of 1810 and monthly average price of 1813, which we reach those, if we reach those levels, could complete this correction. We are looking at the creation of fiat currency called the SDR, challenging the US dollar as the world's reserve currency. Bitcoin also competing as a potential decentralized global currency against the SDR, decentralized vision of a global currency. Gold and silver are a third alternative to the US dollar as a reserve currency. This appears to mark the transition of the US dollar into a basket of currencies, including SDRs. And Bitcoin as the world's reserve currency as opposed to being the single world reserve currency. This change should be discussed more publicly, yet it is not. With so much change in the monetary system, we recommend protecting your assets by investing in gold, silver, and now Bitcoin as a digital asset. Feature in Bitcoin. On our July 24 report, the variable change in price momentum indicator, VCPMI, gave us a buy signal for Bitcoin at 31,752. We recommended long to use the close below 31,752 as your second stop. If you were using multiples, the initial target was the average price of 33,853. Closing above 33,853 activated the sell 1 level of 35,667. And the sell 2 level of 37,768. Bitcoin is now at 46,590 when we wrote this report. Signal that was activated on the 21st was tested on about July 23rd, and when it confirmed the buy trigger, it is now trading around the mean, 50-50 chance of going up or down by closing about 47,325. It will become support for the next price fractal, which activates the target of 65,520. The low last year was 9,850 and the recent high was 65,520, shows a Fibonacci retracement since the high reached a low of 28,800 on June 22nd. The VCPMI said not to go short at that level. Wait to see buyers come in. which they did, and wait for a buy signal at 35,265. What I would like to do here is to indulge in listening to this report that we just published following the recommendation that we made on Bitcoin on the 21st of July. Hello, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room special trade alert for Bitcoin. We have gotten a buy signal at Bitcoin at 31,752. If long, use the close below 31,752 as your protective stop conservatively. This is a report that I published in July 11, 2021, which I would like to review and see what has transpired since as we apply the variable changing price momentum indicator in trading Bitcoin. We'll take a look at what happened and where we're going from here. Let's take a listen. Or you can add to your position and use this level of 29,938 as your second stop and entry point if multiples are being activated. The initial target is the average price of 33,853. Closing about 33,853 activates the extreme level above mean of 35,667 to the sell-to level of 37,768 for the rest of the week.
Are you looking for an automated artificial intelligence trading system?
Buy the gold market at the market. Buy the silver market at the market. We are producing automated signals that are high probability signals, basically. And I wanted to take a look at the Bitcoin chart as basically we have traded since that report was published on July 11th. Where we are trading right now at 46,590. So the signal that was activated on the 11th was tested, obviously, until about the 23rd of July, when it confirmed once again the buy trigger that that it was initiated back around the 9th or the 11th, basically, of July. Now, the variable changing price momentum indicator is a probability model that identifies the areas of accumulation and distribution of supply. When the market is trading in blue, it identifies the highest probability mathematically where you may see accumulation of supply, where you may see buyers come into the market. It's trading at the extreme below the mean, the average or mean being 41,195, which essentially has a 50-50 standard deviation. The levels below by 1 are a 50-90 standard deviation of the relative implied volatility to the mean with a 1-to-1 factor. The by 2 level is a 50-90% relative implied volatility to the mean with a 2-to-1 factor. And that means basically when the price triggers and activates the algorithm by following the systematic methodology that we apply, it gives you a very high probability that the momentum of the market is going to unfold. as it did, and basically the price, once accomplished, is simply a reflection of the momentum that has been identified by the algorithm. The levels in red identify the area of distribution of supply, where you can potentially see some supply come into the market at these levels. But if the demand is greater than the supply that's coming into the market, obviously the price will be reflected and follow that. And by closing above 47,325, it would become the support or the next fractal in price, which activates the high of 65,520. What I wanted to do on this report is basically to come back to the basics and show you how I apply the variable changing price momentum indicator, which is a perfect Fibonacci structure of 5 pivot points that identify the area of distribution of supply, that identifies the average price. And once you identify the average price, you can extrapolate the extremes level above or below. That's what the supply and demand levels are. And as a trader, I choose to take the highest probability trades, and basically I buy the market when it's at the extreme below the mean, or ideally below B2. And when the price comes back up, it's time to load up the truck. And when the price gets to the red levels above, or the sell to level, completing the pattern, you may want to take some profits, reduce your position, and manage it accordingly, depending upon your profile. So you can see here a very simplistic structure that uses the structure of the variable changing price momentum indicator, and I also apply over it basically Bollinger Bands, just to kind of get an idea and confirmation of what the other indicators are telling us. On top of this chart, what I would like to do is to lay over a Fibonacci retracement that, let's say, we made from the low of last year of 905 to the recent high that we saw here of 65,520. This is the Fibonacci retracement from the whole move that was made since September of 2020. And what we see here clearly is that the price, after completing the high of 65,520, reverted down to a perfect Fibonacci retracement that essentially corresponded to a low of 28,800 as of June 22nd. And it was negating pretty much the levels of the VCPMI that was identifying a very strong area of support, an area of accumulation, and it told us don't go short here. You don't go short below B2, even if the market comes down, even below B1. And just expect and wait to see the buyers come in that would take the supply off the market and trigger a buy signal by closing above the B2 level of 35,065. The market closed at 37,745 and activated immediately a buy trigger, and it began to activate the targets above as well. As soon as the signal is activated, buy or sell, it gives you a protective level below or above and targets below or above, where you can manage it as a self-directed individual. And as you can see here, the market rallied to the extreme above the mean. And this is a perfect example for those viewers that do not understand the reversion to the mean principle. It's basically that the market found an extreme oversold condition when it came down to the low of 28,800 and reverted right back up above the average price to the extreme above. And this is what it's called reversion to the mean. And the market went beyond the mean, completing the targets above the mean. And that's what I'm pointing to you right now. So let's see where we are in relation to some other indicators, such as the Fibonacci fan line from the low that we made recently to the recent high. And what you see here is that the market has taken out all of the trend line resistance, the Fibonacci trend line resistance levels, and it's breaking out. Now, in shifting the retracement, the Fibonacci retracement, I want to take a look and see how or what the market looks like as we measure the market from the low that we made recently to the recent high here at 65,520. Let me just correct this for a minute. And I want to clear this and see what the Fibonacci retracement is going to be from the high that we made recently here to the recent low. Now, what you see here is basically that the market has completed the pattern up to a 50% Fibonacci retracement, and this fits right into the sell to levels that I pointed out, that it almost matches harmonically a 50% Fibonacci retracement. If we use the Fibonacci retracement, then the market can rally up to the 61.8, which is the 51,875, and the 58,204, which is the 78.6% retracement. And basically, it would maintain the integrity of this previous trend that was established since last year. And this is almost like a cup and handle formation, which is a very bullish formation. And what we want to see is how the market basically trades through this level. So be aware that the next targets that we're looking at in Bitcoin are 51,875 to 58,204. If we get through the 78.6% Fibonacci retracement, we can rally up to 161.8 extension, Fibonacci extension, that gives us $89,548 for Bitcoin as the target for this year. Thank you, everybody, once again for the opportunity to share this with you, and I look forward to next session here. In the meantime, have a great trading day. Be well. Take care of yourself. Talk to you soon.